Welcome back to Algobot, the channel where we take apart automated trading strategies and study how they actually think. I'm your host here at Algobot, and today we're examining an expert advisor from MetaTrader 5 called Trend Acceleration Momentum. This is a trend-following approach built around a moving average and a momentum filter. Instead of only asking whether a trend is moving in one direction, it asks a sharper question. Is that trend speeding up? By the end of this video, you'll understand the entry logic, the exit logic, the real code, and a full candle-by-candle walkthrough. Remember, this is educational content only and not financial advice. Let's get started. Let's start with the big picture. Trend acceleration momentum is an automated strategy that tries to join a move while it is still building strength, rather than after it has already run its course. Most trend filters simply check that a moving average is sloping the right way. That tells you the direction of the trend, but not much about its health. This strategy goes one step further. It measures whether the slope of the exponential moving average is itself increasing. In plain terms, it looks for a trend that is not just moving, but accelerating. The core indicator is an exponential moving average, or EMA, with a default length of 34. The strategy samples that EMA at 3 evenly spaced points in time and compares how fast it was rising or falling recently versus a little earlier. If the recent speed is greater than the earlier speed, the trend is accelerating. On top of that, it adds a relative strength index, or RSI, as a momentum confirmation filter and an average true range, or ATR, reading to size its risk. In terms of markets, the code notes that it was designed with liquid, trending instruments in mind, such as euro to US dollar or gold against the dollar, on time frames from 15 minutes up to 1 hour. But it runs on whatever single time frame you attach it to, so the same logic can be studied across many charts. Who is this style suited for, from an educational standpoint? It's aimed at traders who are curious about trend-following systems and who want to understand momentum in a more precise, rules-based way. It uses just a handful of broadly ranged parameters, which the author chose deliberately to resist overfitting to past data. It takes one position at a time per magic number, with fixed lot sizing. As always, trading involves real risk, and losing trades are a normal part of any approach. Nothing here is a promise of results. It's simply a transparent look at how this particular expert advisor is constructed. Now let's walk through exactly how the strategy decides to act. Everything is measured on completed bars only, so the logic waits for a candle to close before it commits to anything. That avoids reacting to a price that is still moving. First, the acceleration measurement. The strategy takes the exponential moving average and samples it at 3 equally spaced points. The value at the just closed bar, the value a number of bars earlier set by the slope bars parameter, and the value twice that distance back. From these it builds two speeds. The recent speed, called slope now, is the difference between the newest sample and the middle one. The earlier speed, slope prev, is the difference between the middle sample and the oldest one. Subtract the earlier speed from the recent speed, and you get acceleration. A positive number means the trend is gaining pace. For a long setup, things must line up. The recent slope must be positive, so the EMA is rising. The acceleration must be positive, so that rise is getting steeper. The just closed candle must close above the EMA, confirming price is on the upside. And the RSI must be at or above the RsiTrigger level, which defaults to 53, while staying below the overbought guard of 80. That last condition is important. It means the strategy joins momentum as it builds, but steps aside when RSI is already at an exhausted extreme, so it isn't chasing a stretched market. The short setup is the exact mirror. The slope must be negative, acceleration negative, price closed below the EMA, and RSI at or below 100 minus the trigger, while staying above the oversold guard of 20. Now the exits. When a position opens, the stop loss is placed a set number of ATRs away from entry, controlled by AtrSlMult, defaulting to 2. The take profit sits further away, set by AtrTpMult, defaulting to 3.5 ATRs. Because both are scaled by ATR, the risk and reward automatically adapt to how volatile the market currently is. There's also an optional chandelier-style trailing stop, set by AtrTrMult. It follows price by a fixed number of ATRs and only ever tightens, never loosening, to help protect open profit while letting a winner keep running. Only one position is held at a time per magic number. Let's read through the actual MetaTrader code as it appears in MetaEditor. At the top are the inputs. EmaPeriod, defaulting to 34, is the moving average whose acceleration drives everything. Slope bars, defaulting to 3, is the spacing between the 3 EMA samples. RsiPeriod and RsiTrigger control the momentum filter with the trigger set to 53. Then AtrPeriod, AtrSlMult, and AtrTpMult govern the stop and target distances. AtrMult controls the trailing stop, and lots and magic set the fixed trade size and identifier. Now the long block. The Boolean long signal is true only when all of these hold together. Slope now is greater than 0, so the EMA is rising. Excel is greater than 0, so that rise is accelerating. Cur close is above EMA now, so price closed on the upside, and RSI is at or above the trigger while staying below the overbought guard of 80. When that's satisfied, look at the order code below. For a long, the price is the ask. The stop loss is placed AtrSlMult ATRs below entry. The take profit is AtrTpMult ATRs above, and trade.by sends the order tag tam long. The short block is the perfect mirror. Short signal needs a negative slope, negative acceleration, a close below the EMA, and RSI at or below 100 minus the trigger while staying above the oversold guard of 20. For a short, price is the bid. The stop sits above entry, the target sits below, and trade.sell places the order. Same structure, opposite direction. Let's bring the logic to life on this illustrative chart. On the price panel, you can see the candles with the 34-period EMA drawn as a smooth blue line running through them. Below, in the subpanel, is the RSI, with dashed lines marking the long trigger at 53, the short trigger at 47, the overbought guard at 80, and the oversold guard at 20. Watch how the two panels move together. Look at the first few candles. Price is drifting sideways in a tight range, and the EMA is almost flat. Down in the subpanel, RSI is hovering right around the midline, sometimes just below 50. There's no clear direction and no acceleration, so the strategy simply waits. This is the patient part of the process, where nothing lines up. Now watch the third candle. Price pushes higher and closes clearly above the EMA. The blue line has stopped drifting and begins to tilt upward, and crucially, each step up is a little larger than the last, which is exactly the acceleration the strategy is hunting for. At the same moment, RSI climbs up through the 53 long trigger while remaining well below the overbought guard at 80. All four conditions agree: rising slope, positive acceleration, a close above the EMA, and momentum confirmation. That's where the buy entry marker appears. The stop loss is set a couple of ATRs below entry, and the take profit is placed further above, giving a reward to risk of roughly 1.75 to 1 from the default 3.5 and 2 ATR settings. Follow the next few candles. The move keeps building. The EMA steepens, the candles get taller, and RSI rises toward the mid-70s, staying under 80 the whole way, which tells the strategy the trend is strong but not yet exhausted. As price advances, the optional chandelier trailing stop quietly follows along beneath, tightening but never loosening. By the 8th candle, price reaches the take profit target and the long position closes at that marker. The impulsive upleg has been captured. Now the character of the market changes. The next candles stall and roll over. Price slips back below the EMA, and the blue line rounds off and begins to fall. Watch the acceleration flip. The EMA's downward steps start growing, so the down move is gaining pace, not fading. In the subpanel, RSI is sliding, and it drops down through the 47 short trigger while staying above the oversold guard at 20. That's the mirror image of the long setup. Falling slope, negative acceleration, a close below the EMA, and RSI confirming downside momentum. The sell entry marker appears at that candle. Now the stop sits above entry and the target sits below, with the same volatility-scaled distances. From there, the down leg extends. Each candle prints a fresh low, the EMA keeps falling, and the trailing stop follows from above. Finally, at the last candle, price reaches the lower take profit target and the short position closes. In one clean sequence, you've seen both sides of this strategy. A long taken as an uptrend accelerates, and a short taken as a downtrend accelerates, each confirmed by RSI, and each managed with an ATR-based stop and target. Of course, real markets rarely move this cleanly, and plenty of setups end in a loss when momentum fails to follow through. This is a simplified illustration, shown for educational purposes only. So that's trend acceleration momentum. We covered the core idea of measuring not just a trend's direction, but whether it's speeding up, using the acceleration of a 34-period EMA. We looked at the RSI momentum filter with its trigger and its overbought and oversold guards, the ATR-based stop loss and take profit, and the optional chandelier trailing stop. Then we read the real MetaTrader code and walked a full long and short example candle by candle. Everything here is educational information only, and not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses are a normal part of it. If you found this breakdown helpful, please like the video, subscribe for more MT5 strategy analyses, and leave a comment telling us which strategy to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.